Good morning, everyone. It's half an hour before the market's going to open on Wednesday, June 26th. Yesterday, we had an upward movement in all the major indices. It looked like a little bounce off of the EMA 8, but when we dug into it, what we realized is that it was really more just sideways choppy movement. You can see that SPY, the high is lower than the previous day high. The low is about the same. 530, 543.02, 540, so just barely lower. And then if we looked at the QQQ, the entire bar is contained within the previous day's price range. And with the Dow Jones, we're actually biased to the downside. So even though it looked like the QQQ and the SMH and the XLK all kind of bounced off of some moving averages, we're not too sure yet. And as we can see right now in the pre-market, it looks like we're pulling back a little bit. So we need to be very careful about going long or getting too enthusiastic about this being a bounce and moving upwards. So we want to watch that very, very carefully. What we're really going to need to watch is the SMH today. SMH, or specifically NVIDIA, has been carrying the entire markets, but anything in the SMH category, the semiconductor category, is going to have a large outsized effect on the market right now. We did see a little bit more breadth, or I should say sector breadth, yesterday with the XLC catching up a little bit with the hardware, with the AI stuff, with the semiconductor stuff. But is it enough? Pre-market, we're already sort of down a little bit in the XLC. What is going to be really important to watch is MU. One is reporting earnings. I don't think they quite reported yet. We have some enthusiasm that it might go up pre-market, but we really want to see those results and see how Micron reacts, because that will likely have a reasonably large effect on the SMH, at least sentiment-wise, and Micron's reasonably large. So I don't know how much of a weighting it has within the semiconductors, but I'm pretty sure it's reasonably large and it could have some effect. So depending on how Micron earnings goes, we could see strength in the SMH, or we could see it pull back down. It wouldn't take too much strength to get us to the EMA 8, and if the sentiment is strong after that, then we could get beyond that EMA 8, and then we would have that confirmation of a bounce. If Micron earnings aren't great, then we might just settle back down near the EMA 20, and we would just be chopping sideways. I don't know that Micron by itself can take us down below the EMA 20, unless, of course, it really weighs down on the sentiment in the semiconductor space. But I don't think Micron by itself will completely change sentiment. It will kind of have a price effect, but just because Micron's down, I don't know that people are going to get deflated about NVIDIA. NVIDIA would have an effect on people's opinions of Micron, but I don't know the other way around. So we could get a green light if Micron does well, simply because people's enthusiasm over semiconductors and over NVIDIA is already high. So we'll just have to see very careful. Actually, let's take a quick look, see when they might report. Oh, it's not. Is it aftermarket? It's aftermarket. Okay, so cancel everything I just said. We will have to see aftermarket. So we need to be very, very careful then. So no matter what happens today within the space, the Micron earnings after market could completely change that. So I'd be very, very careful today. This is one of the days that I want to sit out and watch and see what happens, and then have a nice little hedge on. So we had a QQQ hedge on from about a day and a half ago, because we were saying, oh, maybe there's potential that we're pulled back to the EMA 20 right here. And it didn't, it went up. And I said, well, let's keep it on for one more day, because we did not break out. We have an inside bar. Basically, we have our high is lower than this high, our low is higher than this low, or sorry, this high is lower than this high, and this low is higher than the previous day low. So I said, let's keep it on one more day. Because of Micron earnings, I might want to keep it on even one more day. You just have to be very, very careful because the market can turn on a dime on that Micron news because the entire market is hinged completely on the SMH sector right now. So the way that this market is dependent on SMH, I actually believe that this market will react more to the Micron earnings than it will to these reports over here, GDP and the personal income and outlays, because that's a little bit longer term view. This will answer the question of whether or not the Fed is going to lower rates, not in July, but in September or November or December. July is cooked. This should be 0, not 10.3. We had some Fed speakers yesterday. Let's see if I can get a summary. Okay, there we go. We had Bowman, who said she sees a number of upside risks to inflation, and we are still not at a point where it's appropriate to lower the policy rate. She added that she didn't see any rate cuts by the Fed this year. She's saying 0 rate cuts this year. So that's not for sure a rate cut in July. There was someone else, Cook. Okay, Cook said it's appropriate for the Fed to reduce interest rates at some point. Does at some point mean in a month, 4 weeks, 4 or 5 weeks? No. At some point does not mean 4 or 5 weeks. At some point could mean September, could be November, could be December, but it for sure doesn't mean July. So this should be 0. Any data that we're looking at that might affect an interest rate decision is pushed back at the very least till September, if not even longer. So my expectation is that the Micron news is going to be bigger, or we're going to react more to the Micron earnings than we would to GDP or personal income and outlays. Unless these come out so much that the bond market's like, oh my God, they're not going to cut rates in July. So I don't think the market just wakes up suddenly and drops 10% in one day. They will go down to 8%, 5%, 3%, 2%, 0%. It's going to be a gradual move. Even if data comes in, it'll drop by 2 to 5%. It's not going to drop to 0 suddenly overnight because of news. So again, Micron is going to be a very, very important thing to watch. We'll watch VIX very carefully because VIX will have a larger, will be a inside look on what the SPY is doing. Of course, the SPY is going to be heavily influenced by what the QQQ is doing, or more specifically, what NVIDIA and the large cap FANG stocks are doing. And all of those are highly, highly correlated right now because they're related to each other. The Apple is related to NVIDIA. They're riding that AI wave. So is Microsoft. They have OpenAI. They're riding that AI wave. So and then we have Netflix. Netflix is one of those. Netflix is more in the communications sector, XLC, and we're seeing that there's starting to be alignment with XLC and the SMH. So again, the influence of the semiconductors or AI is very, very strong on the S&P right now. In fact, it's probably the only thing that is influencing it and guiding its direction, because otherwise, without it, we've seen this so many times over the past couple of weeks, but RSP equal weighted or just flat. And pre-market, look how much more down we are versus what it looks like in the SPY. Okay, just the baby. SPY is just at the open of yesterday. And if I look at the RSP, pre-market, we're already below the low of yesterday. So that's not great news. That's not encouraging at all, because basically we have no market breadth. So what we will want to, other than Micron, we would want to, what was my thought? I just had a thought. That's something I really wanted to look at. Oh, momentum. Momentum. Let's take a look at our momentum. So number of stocks making 90-day highs, 90-day lows. 69 90-day highs, 103 90-day lows. Both of those are just sort of nothing numbers, and it's just indicating that no bias, because they're similar numbers and they're not very large numbers. This is not a market that is on its way somewhere. This is a market that is chopping sideways, which is what we concluded by the price action, and the fact that we have inside bars on SPY, QQQ, XLK, SMH. so many, everything that's carrying the market right now had an inside day yesterday. So let's take a look at actual momentum levels. And in the overall market, any stock trading above $2, above the 50-day moving average, has now slipped. I guess it's been around 38. It's been around 40. So it did slip a little. Let's click on this. Yeah, it's down. So a little blip yesterday or the day before yesterday, and then with the day before yesterday, this one, and then as of today, right here, we're just 38.4. It's not good. And if we look at our 200-day, 50.65. This is getting so close to 50. It was at 51 point something. Now we're at 50 point something. If all we need is just to go down another 0.65%, and we will have momentum indicating a bear market. Now, it doesn't mean we're in a bear market. It just means that momentum is moving towards a bear market. Momentum is a direction. It's not where we are. It's what the major force is pushing us. If I am standing at the top of a hill and I just take one step, then I have downward momentum. It doesn't mean I'm at the bottom of the hill. It just means that there's now forces that I have to work against if I want to go back up the hill. That I have forces that are very naturally push me towards the bottom of the hill. Doesn't mean I'm at the bottom of the hill. Doesn't mean I'm halfway down the bottom of the hill. I'm just wherever I am, but there are a lot of forces pushing me in a certain direction. That's what this is indicating. The second we hit 50 or 49.99, then we've got forces pushing us down that are going to get harder and harder to work against the longer or the lower it stays below 50. So we're at a danger point right here. So what that means is, man, I want to be protected. I want to stay neutral in everything that I have right now. And I want to be aware of downside risk, which means I'm positioning myself very carefully, or I'm hedging myself, or both. It doesn't mean that I'm, again, on my way down yet. It just means I'm standing at the top of the hill, and I want to be careful. I want a safety net. So the hedge is appropriate. We want to be aware with every trade that we do. What if there is a bear market? Or the way that I usually think is in terms of, what if there's another COVID event that just out of nowhere? Because what was COVID? This was COVID. Look at where we were the day before COVID. We were just humming along, very nice uptrend. Bounce off the EMA 20, bounce off the EMA 20, bounce off the MA 50, bounce off the EMA 8, come down and touch the EMA 20. If I put a replay bar right here, look at that, all-time high. One more day. Okay. Oops. No, that's too much. Oh. Okay, one more day. I came and I touched the EMA 20. This looks like a normal reversion to the mean that has the potential to bounce and come back. And if not, then we break the EMA 20, give us a couple days. We might bounce off the MA 50. And if not, then it will break down and maybe. Okay, so this is an all-time high, pull back to the EMA 20. That's what it would look like to us. I'm like, okay, there's maybe a little bit of potential for us to come down and hit that MA 50. Maybe I'll hedge myself right here. Actually, that's what I did during the actual COVID. So I had hedges that made me 1900%. That covered all my other, like more than covered all my other losses. So because I was, okay, maybe I'll do the baby hedge to the MA 50, which is what we did 2 days ago. That's what we talked about 2 days ago. So I'm behaving like there might be a COVID event because that's just how we always behave. Because actually, I wasn't protecting against the COVID event. I was protecting against this move toward the MA 50 and then maybe a move down to the MA 200, just like we talk about in normal markets. But we just never know. That's why it's called a black swan event. We just don't know when it might happen. It could happen when we're 2 days away from an all-time high. So what happens next? COVID, bam, right through that MA 50. No, we did not bounce off of the EMA 20. We did not even bounce or come even close to the MA 50. We went straight through it and then kept on going and then straight through the MA 200. So this is the types of things that I think about because right at the very beginning of my trading career, the financial crisis happened within a few months of me, like 6 months, 6 to 8 months of me getting my trading job. We were smack in the middle of the financial crisis. So as a green trader, I'd been an analyst, but I hadn't been responsible for any capital and trading any capital. And at the very beginning of my career, bam, one of the worst financial crises is actually, in modern times, there was COVID and there was this, and this lasted much longer than COVID did. So it's ingrained within me to think about these things. And I was responsible for programming, creating our hedging program. So I took the ideas of the senior traders on my desk and I programmed what we call the hedgerator. And every single day we used the hedgerator to rebalance our hedges within our portfolio. So by the time our firm actually crashed, we went to zero. We got bought out by Bank of America. But by the time they shut us all down and said, no more trading, Bank of America is taking us over, my trading desk had 30 million in profits, whereas every single other trading desk had at least 100 million in losses. So the hedging really saved our butts, my desk's butts, not the firm, obviously. But this is ingrained within me, and this picture is always in my mind because this is such a beautiful uptrend and a all-time high, and then we get COVID. So let's actually look at what RSP looked like on this day. I don't remember, so this will be an interesting exercise. So this is Feb 21, 2020. February 21, 2020. So the RSP was actually looking very good. We did not have the disparity that we have today. You can see that this is also making all-time highs in the RSP, or at least it's matching it at our all-time high. It's not quite as high as the S&P, but it's still the very same thing. Uptrend bounce off of MA50 going up. It's at its EMA 8, hits its EMA 20, bam, COVID. So we're not even getting the signal, when we had COVID, we didn't even have the warning signs that we have right now inside the markets. So that's the very definition of a black swan event. You don't know. There's no signs. There's no signals. It just out of nowhere, something happens. So I want to be cautious because there are signs of weakness in the markets. We are coming off of all-time highs. There's no guarantee that we're going to bounce off the EMA 8 or the EMA 20 or the MA 50. Right now, we're not looking so far ahead, but I've got a baby hedge for the EMA 20. And then when we get to the EMA 20, I will take off that hedge. I'll put on a new hedge and for the MA 50. Or if this bounces off and it's clear that we break above this high right here and we start to challenge all-time highs right here, then I'll take my hedge off. Well, really, realistically, after the Micron news, I will take my hedge off. And then as we get back to the EMA 20 or potential for the EMA 20 or potential breaking the EMA 20, we'll put a hedge back on. And so we just want to be aware of, hey, right now we have heightened risk. COVID, we had no signals other than the fact that we were pulling back to the EMA 20. It looked like a normal reversion to the mean, and we already had a baby hedge for just movement down to the MA 50. Saved our butts, saved my butt, I should say. I wasn't doing services or explaining or teaching it to anyone back then. So the point is, let's be cautious. There are warning signs. We could, if Micron does very well and enthusiasm remains high for the AI sector, yeah, we could make new highs, but we're not going to go screaming higher. It's just this market needs to take a little bit of a breather before it could move higher. So we need a reversion to the mean or a pullback before we can move even higher. We've had 1-5% pullback so far this year. We expect another 1 to 2 and a 0 to 1 instances of a 10 to 15% correction. Will it happen now? Don't know, but is more likely now than it has been over the past 2 to 3 months. And it was actually more likely now than it was back here when we got the pullback. So we're just preparing for that possibility. Let's see, Micron is not reporting. I need to get that in my head. Micron is aftermarket. We can see that the future or the pre-market were down, not a huge amount. We are below this purple line. So we may get a movement towards the previous day close, but even if we do, there is resistance immediately afterwards. So I wouldn't get too excited about that. Oh, I lost my lines on the QQQ. Interesting. Even lost my thin purple line. What happened? Okay. And my red lines. I lost several lines. I'll redraw them later. But for now, we are below this purple line. We've been super low volume. There's no catalyst today. There is catalyst after market today in Micron. So I'm not expecting a huge range. We didn't get a big range yesterday. I'm not expecting a big range today. We haven't had a big range for several days, but there's no catalyst and there's no volume. And as long as there's nothing going on in the markets, like as long as RSP looks like this, institutions are not going to really want to put a lot of capital to work. We're not really going to want to put a lot of capital to work before GDP or PCE. And then we've got 4th of July weekend or holiday coming up. I guess weekend, it's Thursday. A lot of people will take Friday off as well. So we might just be sitting here chopping sideways for a little bit or slowly drifting higher or slowly drifting lower for the next week. So we'll just expect for today a pretty quiet session. We're only 5 minutes away from a market open, so I'll stop talking now. Have a wonderful day, and I'll see you in the post-market review.